You don't need to be an expert to start investing and building wealth in the stock market. In fact, there are literally countless resources available for beginners to learn and get started. Online platforms and apps offer user-friendly interfaces and educational materials to help individuals understand the basics of investing. Additionally, there are numerous books, podcasts, and online communities where novice investors can gain insights and learn from experienced individuals in the field itself. VTI offers a low fee and a 0.03 expense ratio, making it an excellent choice for long-term wealth generation. To reduce risk and maximize returns, consider investing in assets outside the stock market, like real estate, which REITs manage and generate income from. VTI aims to track the performance of the U.S. Total Market Index, which represents nearly 100% of the U.S. stock market. This one-size-fits-all approach offers a low-cost and easy way to access all returns across the entire U.S. stock market, with a strong mix of stocks in the small, mid, and large-cap segments. VTI has returned an average of 12.52 per year, ensuring investors never miss an opportunity presented in any market cap. Despite recent volatility, past performance is not a guarantee of future results. VTI's dividend yield is 1.66%, or about 3.4 cents per share per year. Despite a small fee, VTI's expense ratio is only 0.03, making it an affordable option for investors. Combining VTI with other ETFs can help generate long-term wealth, such as owning sleek modern office buildings, luxury hotels, and real estate, without the need for millions of dollars in capital. A well-diversified portfolio goes beyond the stock market, reducing risk and maximizing returns. Investment funds, or REITs, own and manage real estate, generating income. VTI aims to track the performance of the U.S. Total Market Index, which represents nearly 100% of the U.S. stock market. This ETF owns about 4,100 stocks, with major holdings in major U.S. companies like Apple, Microsoft, Amazon, and Google. It is a balanced fund with a strong mix of stocks in the small, mid, and large-cap segments of the stock market, ensuring investors never miss any opportunity presented in any market cap. VTI has returned an average of 12.52 per year, indicating that if you invested $10,000 10 years ago, your investment would have grown to about $32,518. Past performance is not a guarantee of future results, and investors often invest in the stock market. VTI, a dividend-focused ETF, has a 1.66% dividend yield, making it an excellent choice for long-term wealth generation. It offers low fees and a 0.03 expense ratio. To reduce risk and maximize returns, consider investing in assets outside the stock market, like real estate, managed by REITs. Now, answer this, guys. What type of wine do traders drink? Import, export. Okay, I know it wasn't that funny. Please forgive me and don't click away. I know I'm not that good at making jokes, but what are your thoughts on marketing and trading? Let us know in the comments below. If you want to learn more about trading, investing, or marketing, subscribe to our channel, Finance Explained. And if you enjoyed this video, then give it a thumbs up. Art is a physical asset with a fixed value attached to it, making it more desirable during times of inflation over 3%. Art collections have the potential to compete with long-term bond yields and reduce volatility. The art market is bulletproof, showing the lowest correlation to stocks compared to other major asset classes. Platforms like Masterworks Art offers high-value art from artists like Picasso and Banksy, allowing investors to invest in art without millions of dollars. International stocks should not act as a core holding in a portfolio, as non-U.S. markets tend to have a low correlation to U.S. markets. Investing in non-U.S. stocks helps spread risk across the portfolio compared to investing in U.S. stocks alone. The Vanguard Total International Stock ETF, or VXUS, is a popular combination for adding international exposure to a portfolio. However, Vanguard's VTS ETF does not have control over how much of the portfolio to invest in U.S. stocks versus the international ones. Combining VTI with VXUS over VT gives you more control over international exposure. Investing in international stocks is not a requirement, it's a personal preference. Even Vanguard founder Jack Vogel didn't invest in international stocks, but it's important to consider the potential benefits and risks associated with investing in international stocks. Research the reasons for including international exposure in your portfolio, as there are 7,871 international stocks with major holdings in companies like Taiwan Semiconductor, Nestle, Tencent, and Samsung. Visas have returned 5.2% annually, so investing 10,000 years ago would be worth about $16,578. Still alive after 10,000 years to spend it. However, international stocks can outperform U.S. stocks, and if they do, they can provide a steady income stream. Dividend ETFs, such as the Schwab U.S. Dividend Equity ETF, track the total return of the Dow Jones U.S. Dividend 100 Index, which measures the performance of high dividend-yielding U.S. stocks with consistently high-paying dividends. Dividend ETFs like STHD offer dividends, growth, and downside protection during bear markets. However, STHD is down 10% compared to the general market, which is a significant difference. STHD currently has 104 dividend-paying stocks with major stakes in Merconco, PepsiCo, Coca-Cola, and IBM. In the last decade, STHD has returned 13.33%, making it a great choice for a dividend ETF approach. STHD provides a better dividend compared to other ETFs, with an annual dividend of 2.83 and a 2.23 cent per share dividend. If you had invested $10,000 in STHD a year ago, it would have paid around $310 in dividends. However, the stock price of STHD is relatively low, with each share being only 72 cents cheaper than one part of VTI. Technology ETFs like VGT, Vanguard Total Bond Market ETF, play a significant role in portfolios, with 394 total stocks and top holdings in the world's largest technology companies. Over the past decade, VGT has given an average annual return of around 18.24, allowing investors to grow their investments by around 58,886. VGT is considered an aggressive growth ETF, but it still pays dividends with a dividend yield of 0.87 and a dividend of 2.98 per share. The expense ratio is a little higher at 1.03%, but it's still a good option for those nearing retirement. By focusing on investment-grade bonds, VGT provides broad exposure to the U.S. Bloomberg Aggregate Float Adjusted Index, providing broad exposure to the investment-grade bond market. The ETF currently holds about 10,173 bonds, with 66 of them being government bonds. The expense ratio is low at 0.03%, and investing in a diversified portfolio with bond ETFs can help reduce volatility during turbulent times. BND has a dividend yield of 2.2% and has paid about 1.79 in interest over the past year. With a low expense ratio of only 0.03%, investing in this ETF is a wise investment strategy for those looking to invest in technology and technology-focused ETFs. So diversify. Many people choose to invest in growth in income, international growth, and aggressive growth, and really diversify that portfolio. And that's a wrap for today, folks. If you enjoyed today's video, make sure to smash that like button and press that red button right over there to subscribe to our channel, Finance Explained, and become part of this ever-evolving family. Don't forget to press that bell notification icon to invest in us and never miss an upload from us. And I'll see you in the next one.